know how to install indicators. Let's go back to the part 13, where I told you I'll continue with that indicator called the ATR. Now, those who have watched how to calculate stop loss and TP video, it is on this channel, how to calculate stop loss on or TP. I've had a lot of them asking me, I'm bringing the ATR indicator back so you can see it here. I've had a lot of people asking me, how would you be able to determine or to be able to tell how many pips you should give as a TP or how many pips you should give as a stop loss? You are buying maybe Euro JPY or you are selling Euro JPY. How many pips should you go for as your TP or how many pips should you go for as your stop loss? There are several ways you can determine that. Is that okay? There are several ways, but I'm going to talk about one of them today with the use of the ATR indicator. In our previous video, which is the episode 13, we got to know that we had indicators that tell you the momentum or volume of the Forex market. And ATR is one of them. It is able to tell you the volume of the market or the momentum of the market. And I told you the last time in our episode 13 video that you always look at the figures that the ATR presents. The 14, which is in brackets, simply means that calculation is done based on the past 14 candles. I wouldn't want to go into details. The episode 13 video should explain all that. Now, if you haven't watched the 13, please go and watch it so that it becomes easier. Now, the second figure that you see here, 0.622. So 0.622. If you remember, in our previous video, which is the 13, I told you to always ignore the last digit and then concentrate on the rest of the digits after the point. So here it will be level 62. So it means on average, this is on daily time frame. If you look at the chart, it's on daily time frame. Is that okay? So this means that on average, this pair, which is Euro JPY, can move only 62 pips on average. It will move 62 pips on average. Is that okay? If I pick another pair, for instance, maybe Euro card. On daily Euro card, the figures you see here right now is 0.00873. So I said you should always forget the last number. Is that okay? So it's left with 8 and 7 here because the rest are just 00. So 8, 7. So it means on average, Euro card will move on average 87 pips. On average, 87 pips. Is that okay? This is on average. Good. If you take all the pairs one after the other, you will see on average the movement of the pair. So for instance, this is GBP USD. So if you look at it on the ATR, it's 0.00819. So it means on average, this pair will move 81 pips. 819, so we forget the 9, so it's left with 81. So on average, GBP USD on daily will move 81 pips. Now, when this ATR says it will move 81 pips, this is what it means. Let me zoom the chart and show you something. Now, when it says it will move 81 pips, it doesn't mean that it will move only up 81 pips or it will move only down 81 pips. It means the whole daily candle will move 81 pips. So if you look at this candle, for instance, supposing this was the candle decided to move 81 pips, you see that the market opened somewhere here. This was where the market opened. And then it moved upwards, came back, and then moved downwards to a certain level downwards and then retrace a bit back. If you look at it, is that okay? Now, if you look at this one too, it moved upwards, retraced, moved downwards, retraced, and then finally closed in between the middle. So it means 81 pips simply means that it can go up maybe 10 pips, okay, and go down maybe 71 pips. So if you add a 10, which it moved upwards, to the 71, which it moved downwards, that would be 81. It can choose to move up 30 pips and then move downwards maybe 51 pips. So if that happens, you still get the 81 pips. It can choose to move maybe 40, 41. It can move 40 pips up or move 41 pips down. So when the ATR says GBP USD will move 81 pips, it doesn't mean that it will just go one direction, 81 pips. It is possible it can go just one direction, 81 pips. And it is possible it will not just go one direction, 81 pips. Now, if you look at all these candles, these are all daily time frames. These are all daily candles, daily candles. And you realize that the trade never went one direction. It moves down, sometimes move up, and then retraces and go a different direction. So if you look at the candles that has been formed, you see how each of them is formed with different kind of movement. That tells you that when the ATR gives you 81, it doesn't mean that the trade will go just one direction, 81. It can go up and come down, but when you sum the two up, you get 81. And again, this is just on average. It means it can move more than that. Please, the ATR is average true range. That's the full meaning. So it means on average. The word average means that it can move more than that. It's just an average movement. So it can choose to move more than that or choose not to move more than that. Is that okay? So if you are a trader and you want to set your TP, you know that on average, GBP USD will move 81 pips. So if I am a trader who want to make profit from daily trades, listen carefully. If I am a trader that wants to make profit from daily trades, that means you are a day trader. You open your trade today, you close it today. You don't wait for the market to close and open on the trade again. No. So if you are such a trader, it means you are a day trader. If you're an intraday trader, it means you can choose to leave your trade for 2 or 3 days or 4 days. And if you are intraday trader, you can choose to leave your trade for a month, 2 months, 3 months, 6 months before you close it. So there are a lot of traders with different strategies. So if you are a scalper, I always use that word scalper, or if you are a day trader, a scalper is a trader that looks for smaller pips. Is that okay? That is a scalper. So if someone tells you I'm scalping the market, it means he's looking for smaller pips, 10 pips, 20 pips, 15 pips maximum. If worst comes to worst, he goes for 30 pips. Such a person is just scalping the market. Someone who is looking for 10 pips, 15 pips, 20 pips, 25 pips is a scalper. Is that okay? So if you are a scalper or you are a day trader, someone that opens his or her trade today and then closes it today, that is a day trader or a scalper. So if you are a scalper or a day trader, and you know that on daily basis, on average, GBP USD will move 81 pips, what should you do? What should be your TP and what should be your stop loss for GBP USD? There are different ways people do this, but I am going to show you a few of them. Is that okay? Then you choose the one that will suit you. Now you have the 81 in mind, which is the average true range, which GBP USD can go. So if that's the case, since the trade GBP USD will not just move one direction, 81, there are people who will divide this 81 into 2. So the person will go for 40. 40 pips as TP. Okay. They will go for 40 pips as TP because they know that no matter what happens, at least if the trade decides to go one direction and even goes 40 and then come back to go down 40, no matter what happens, they will get half of the ATR. It is easy to get the TP. if they are in the right direction, if they predict correctly, if they go for a sell and then it goes sell, it means it is possible to make half of the ATR in a day before the day ends. Is that okay? If the person is scalping the market and is just going for half of the ATR, it means it's possible to get it if he gets the direction right. Is that okay? So there are people who use that strategy. They use half of the ATR as their TP. That is those who are scalpers or day traders. They only go for half of the ATR. Some will choose to go for 1.5 of the ATR. Do I say 1.5? No. Some will not go for the full ATR. They can go for more than half. Let me put it that way. So instead of going for 40 out of the 81, someone can choose to go for maybe 50. Or someone will choose to go for 60 pips as TP. It means he's still within the average true range. And then there are people who assume that, okay, so far as this trade is on average will move 81 pips, I'll give this trade a stop loss of 81 pips. There are people like that. They will say, okay, since on average GBP USD will go 81, let me give it a stop loss of 85. So at the back of their mind, they know that if worst come to worst, their trade will never hit stop loss because on average, the pair will move 81 and they have gone for 85 as their stop loss. Please, this is how some people trade using the ATR. I am not saying it is bad. It's all about risk management. If you're able to manage your risk very well, you don't have an issue with whatever stop loss it might be. So supposing you have $100 account and you go for 0.01 as your volume or your lot size. 81 pips will give you $8.0. Sorry, 8.1. So if it's your $100 account, you are going with 0.01 and the trade should go against you the whole of this 81. It means it's just against you for $8. Do you get it? And if it goes in his favor for 40 pips, it means he's going to make $4. So his account is $100. So he chooses to go with a lot size of 0.01. If in a day he gets his 40 pips, he has gotten $4 on his money. Are you getting the calculation? We are doing pure practicals on how to trade. So get the understanding well. He knows on average, the ATR is 81 on GBP USD. So he decided to go with a lot size of 0.01. Okay. 0.01. So if this trade GBP USD, if he sets a stop loss of 100 pips, if he sets a stop loss of 100 pips, which is GBP USD, which he knows on average it is just going to be 81 pips, but he's giving a stop loss of 100 pips. If this trade should go against him, the whole 100 pips is just going to be a loss of $10. And then he go with this lot size. Okay, he's risking $10. So that is his stop loss, 100 pips. Means that he's risking $10 from his $100 account. And then he's going for just 40 pips. That is half of the ATR. So once he gets the 40 pips right, it means he has gotten $4 on his money. So he's risking $10 for $4. And such people, they always win. It becomes difficult for their stop loss to be hit. It becomes very difficult for their stop loss to be hit. So assuming in a day, you are just looking for $4. Multiply $4 times 21 working days, which is for a month. Is that okay? 21 working days times 4. This is his target. So on his $100 account, so this will give you 4 here. 428. So it means before the month ends, he's going to get $84 on his $100 account. So before the month ends, he has made $184. he has gone for a bigger lot size, but a smaller, he has gone for a bigger stop loss, but a smaller TP, which is always half of the ATR as his TP. He goes with the smallest lot size, which is 0.01. So even with 0.01 and trading 21 working days, which is for a month, he is able to get 40 pips out of each of his trade. He's been able to make $84 on his $100. Let me give you another scenario. His account, his account balance is $100. He decides he wants to use 0.01, which is the least lot size. And then he decides that he's always going to look for half of his ATR as TP. Half of ATR as TP. Are you getting the calculation here? Half of ATR. Half of pardon me for my write-up, ATR. So half of ATR as what? TP. And then there are people who even go for 1/4 or 1.5 of the ATR as stop loss. So let's even assume we are going for 1/4 of the ATR as stop loss, or assume that you're going for the whole ATR as your stop loss. Okay. You are only going for half of the ATR as your TP, and then the full ATR as your stop loss. So a pair like this one, let's look at the volatile pairs, which is the GBP AUD. GBP AUD, the ATR says that it will move 93 pips. This GBP AUD sometimes can move 200 pips or 300 pips, the same as GBP NZD. For instance, if you look at GBP NZD, it's moving 129 pips. GBP NZD 129 pips in a day. This is daily time frame. So he's going to go for the whole 129 pips as stop loss. Okay. Then he goes for half of this ATR as TP. So half of 129, which is, let's say, approximately 130. Half of 130 will give you what? That is 65 pips. So he's going to go for 65 pips as TP, and then the whole 130 as stop loss. So because his stop loss is so wide and he's using 0.01, his trade is going to have enough room to operate because his account is just $100. If he should lose the whole 130 pips, that would be $13. That would just be $13. If he should lose the whole 130 pips stop loss, if his stop loss should be hit, he will only lose $13. So $13 from his $100 is absolutely nothing so much. Is that okay? And then he's just looking for 65 pips as his TP. So such a trader, if he should set his stop loss at maybe 300 pips. If, I'm just saying if he should set his stop loss as 300 pips with a 0.01 lot size, it means 300 pips will be $30. From his $100 account, if this trade should even go against him 300 pips, it means he's just going to lose $30. And then he's targeting 65 pips. So there is no way this trade will move just one direction, 300 pips, without moving this other direction, 65. So it is possible he will get his 65 pips profit. So assuming he gets his 65 pips profit, that is $6.5 as profit. So such a trader, assuming 21 working days, he has made profit consistently for 21 working days. Even if he made 20 pips, let's assume he took 20 pips from the trade. 20 pips is going to be $2. So 2 times 21 will give you what? That's $41. So on your $100, if you should get $41 on it, $41 on $100 in a month. That is about 41% interest. Ask yourself whether there is any bank in your country that would want to give you 41% interest on your money. No. But in this case, you have managed your trade very well. You have given the trade enough room to operate. So there's no way, it will be very difficult for your trade to even wipe your account out, because you have allowed your trade to have enough room. Even if your trade should even go against you 500 pips, okay? If it should even go against you 500 pips, that is just $50. That is half of your account balance. You have $100. If your trade should go against you 500 pips, and there's no way your trade can go against you 500 pips without giving you the 65 pips you are looking for, or without giving you the 20 pips or the 30 pips that you are looking for. So this is how those who scalp the market, they trade. Listen carefully. I'm beginning to give you the keys to how to win in the forex market. The forex market is not a greedy place where you want to just get all the money at once. If you want to be greedy, you end up being swallowed. You end up losing everything on your account. So if you are a trader and you want to be a scalper, then you need to use the least lot size. For instance, you have $100, use 0.01. Go for half of the ATR as your TP, or if you like, go even for less. Even if your ATR is 100 pips, instead of going for maybe 50 pips, choose to go for maybe 30 pips. Okay? And if you get your 30 pips, that's $3. With this lot size, that's $3. So imagine every day you make $3 on your $100 account. Even assuming you don't even set a stop loss, because if you go with 0.01 and you are looking for just 30 pips as TP, before your account will be wiped out, your trade needs to go against you 1,000 pips. Unless with 0.01, it means the trade needs to go against you 1,000 pips before your account will be wiped out. So do you really think your trade can go 1,000 pips without going 30? Okay. Do you really think your trade will go 1,000 pips without going 30? Okay. So you understand the scenario here. So forex trading is not about being greedy. I pray that you get what I'm trying to say. Okay. I pray that you get it. Now, let me give you a scenario, a pure practical example. Assuming you took your trade here, okay, here, and then you are looking for 30 pips. Is that okay? And then this trade decided it will go against you. Let's say you sold. When the trade got here, you sold, and you wanted 30 pips. So the next trade went all the way up here, about 200 pips. After going the whole 200 pips, you are still in a sell. You decided not to close your trade because it went 200 pips. You still stayed in the trade came back down. You were looking for just 30 pips. The next candle here gave you that 30 pips. Up to this level is 43 pips. Even up to this level down here, that is 127 pips. So even if you didn't set a stop loss, if it went against you like what? It would have still come back in your favor to give you your 30 pips, which is your $3. How easy is that? Okay. Or let's assume that you took your trade somewhere here. When the trade got somewhere here, you knew that it was going to buy. So you decided to buy. And when you bought, the trade decided to reverse against you. So it started coming down. It came all the way down for how many pips? 280 pips. After 280 pips, the trade decided to come back up again, came back again, and went all the way 147 pips. So if you use 0.01, there is no way you wouldn't have gotten your 30 or 40 pips from this trade. So there are people who trade without stop loss. And those who trade without stop loss, they minimize their risk. Okay, they go with the least lot size, and then they go for half of the ATR or even less. And they always win because immediately you get your entry correct, immediately you get your entry right, it is possible to make the profit. It is possible to make the profit. Immediately you get your entry right. So even assuming you are just a new trader, you don't know how to trade much in the market. So you decided that, okay, out of the whole month, you are just looking for 5 trades. Okay. So the 5 trades, 5 times 3, you are looking for, out of the 5 trades, each of them should give you 30 pips. So that will be $15. The whole month, you are just looking for $15. I'm just saying that for saying sake. Is that okay? Because you are looking for 30 pips from 5 trades. So you would have gotten $15. So your account wouldn't be $100 again. At the end of the month, your account is going to be $115. It is not bad at all. At least you have not lost. You have rather made profit. If this money, this whole $100 was lying in your bank account, that $15 wouldn't have come on it. But you have decided to invest it and decided that you just needed 5 trades in the month. So you had your $15. The second month, your profit has doubled to $30 profit. So in a year, times 12, how much would you have? Before the year ends, your $100 will become what? Just ask yourself. So every 2 months is 30. So 30, 30, 30. That is 90, right? 30, 30. You are good to go. Just imagine. Okay, ask yourself. 2 months will give you 30. Another 2 months will give you 30. That is 6 months. So another 2 months will give you 30. Another 2 months will give you 30. So 30, 30, 30, 30. That is 120. So at the end of the year, your $100 has given you $120 profit. So your total balance at the end of the year is now $220. Okay. No bank in the world will give you 100% interest per annum. No bank. Check any of the world banks, whether in the US or whichever country. No bank will give you this is $120, which is 120% per annum. Okay. No bank, and I repeat, no bank, unless if you know a bank like that, tell me, I will be ready to invest. No bank will want to give you 100% interest on your money per annum. The banks will give you, the best rate they can give you is 30% per annum, 25% or 20% per annum, 15% per annum. That's the whole year. They'll give you 15% profit on your money. But because you have decided to trade it in Forex, and you decided to go for just 5 trades in a month, and decided to go with the least lot size, which is 0.01, your investment at the end of the year has doubled and tripled more than if you had taken that money into the bank to invest. So you have made $220. If you think I'm lying, just go get $100 and deposit in your bank account as an investment, and get another $100 and put it in Forex and go by this strategy, and then compare at the end of the year and see which one is more profitable. So the Forex market is not a greedy place. It's about strategy. And this is what I teach people who want to do one-on-one mentorship. I hold your hand, I give you a printout, I teach you the steps to take, the formula to follow, the steps to follow to become a successful trader. If you want one-on-one mentorship, it's available, but that is not for free. It is not for free. I'll repeat, it is not for free. So I give you the blueprint to follow. I do the calculations, I do the steps for you, I tell you, this is what you should look for. What are your expectations? Let's do it together. Let's work it out. And then we follow the pattern. And once we follow the pattern, you see yourself winning. That is how investment is all about. Forex is not about greed. Forex is not about I have $100 account. So let me go with a lot size of 0.20. Okay, that is greed. Let me go with a lot size of 0.10. 10. That is greed. You have just $100 and you are going for 0.10. With 0.10, if the trade goes against you just 100 pips, it means your whole account is blown. Yes, with 0.10, if this trade, your account balance is just 100. If the trade goes against you just 100 pips, you have lost your whole money. If you use 0.20 and it goes against you just 50 pips, you have lost the whole $100. So why would you want to be greedy? Once you can go with just 0.01 and then steadily make your way through in life. Success is a gradual process. It's about compound interest. Those who have made it in life, ask them. I read a lot of books, these financial books, they will tell you it's all about compound interest. They compound the interest. The money comes in bits. And those monies that come in bits are being compounded and then become huge. In 5 years, in 10 years' time, you see them huge. And then you now see them as millionaires. So the Forex market is not a greedy place. It's not a place to be greedy. It's not a place to make fortunes overnight. It is not a place to turn yourself a millionaire just overnight. It is a place you have to trade cautiously. Those who are not successful in the Forex market are greedy people. And they do not have a plan. They do not have a strategy. Theirs is to just press the button and sell or buy. No risk management. All they know is that, let me just give it any lot size. If I give it a bigger lot size, I'll make bigger profits. So they give it a bigger lot size and thinking that they'll make a bigger profit, they make a bigger loss and their whole money is gone. Forex is not that way. That is why I'm taking my time here to teach you the right steps you need to become successful. So a recap of what I've just told you today with the ATR. You can choose to go with half of the ATR as your TP or even less. If you are a scalper or if you're a day trader, you can choose to go with just half of the ATR and choose to go with the whole ATR or as your stop loss, or even choose to go more than your ATR as a stop loss. And that if you don't even mind, you can choose not to even have a stop loss. So far as your risk management is good, so far as you are using 0.01 with maybe $100 account, your risk is good because 0.01, you need about 1,000 pips before it can wipe out your whole account. So if you don't set a stop loss, indirectly what it means is that the trade that you have entered, if you set a TP of 40 pips or 50 pips, what it means is that your TP is 50 pips and your stop loss is 100,000 pips. Yes, if you go with 0.01 and you are looking for just 50 pips as your TP, and you decide that you won't set a stop loss, what you are telling the whole market here is that your stop loss is about 1,000 pips because your account balance is $100. So your stop loss is 1,000 pips and your TP is just 50 pips. There is no way your trade will go 1,000 pips against you without going 50 pips the other way to give you the profit. There is no way. So you see, once you manage your risk very well, your risk is all about the lot size. The risk is all about the volume or the lot size. Once you know how to manage your risk, and then you get a little better entry, you may not get the best entry. Trust me, sometimes you may not get the best entry, but once you get a good entry, listen to the language, you may not get the best entry, but once you get at least a good entry, you are sure of your profit. And if you should even get even 5 or 10 trades in a month, you are already compounding your interest for the bigger profits in the future or to become the millionaire that you want to become. In 5 years' time, in 10 years' time, you will not see yourself the way you are seeing yourself today. You might think that 5 years is too long or so long. 10 years is so long a time. But if you don't take that step today, I can be bold and tell you that the 10 years will come right now and you will still see yourself the way you are. The 5 years, which you think is so long a time, will reach sooner than you think. And you still see yourself at where you are. I don't pray that should happen. So Forex is not a greedy place. It's a place where you take things step by step, or you take things on the gradual basis. So when it comes to risk management or following a pattern, I may be showing you some on this channel, but if you want me to hold your hand and walk you through some of these things one by one, just like I said, it is not for free. I am ready to help you out in that regard, but it is not for free. But I can assure you that what I have already said on the channel here in this video is already $1 million advice I have given you. If you follow this religiously, you might not even need me. Yes, if you will follow this religiously, you will not need me. If you will be disciplined and follow what I have just shown you, you will already be making your way. But we may be looking at other ways that people trade using the ATR, and that will come in another video. I'll be wrapping the ATR in that video. What of those who go for the smaller stop loss and then a bigger TP? Yes, it's also there. So I'll be talking about, there are people who go for smaller stop loss. They know that the ATR for GBP NZD is 129. They go for a lot size, a stop loss of maybe 20 pips, stop loss of 20 pips, and then a TP of maybe 50 or 100 pips. Okay, so at this point, you realize his stop loss is too small. His TP is very big. Yes, people also do it that way. But if you want to do it this way, unless you have a system that gives accurate entry points, if you don't get such a system that will give you accurate entry points and you want to go with a smaller lot size, you will always lose your trades. You will always be a loser. You will always lose your trades. Or you might lose more of your trade than you will win. If you get the smaller lot size if you get a smaller stop loss, if you choose a smaller stop loss and then a bigger take profit, and you don't have a better entry point, if you don't have a system that will give you a better entry, you will end up losing more trades than winning. So I'll be talking about that later in the next video. Those who choose the small stop loss and then go for the bigger take profit, what is the danger involved? The danger involved is as simple as ABCD. The danger involved is that you can easily hit your stop loss if you don't have a better system that will give you the best entry point. But if you get a system that will give you the best entry point, if you get a strategy that will give you the best entry point, then of course you might not have to fear. If you are going for the least stop loss and then going for a bigger take profit, you will not fear so far as you have a good system or a good trading strategy which has been tested over time. Is that okay? Even with that, you don't need to be greedy. If you want to be greedy because you have a system, there might be misfortunes in the market. There might be days that things will not go well for you. And if you don't take care, that day will become a bad day for you. You might end up losing everything that you have suffered to gain. So it's still not that juicy to go for that. But I have to make it plain. I have to show you because other people are doing it that way. So the bottom line here is manage your risk very well. Use the right lot size. That is under risk management. You use the smallest lot size that you can. And think of compound interest. How can you compound your interest bit by bit? And then in that order, how do you get a system or a strategy that will give you at least a good entry, not the best entry point, but at least a good entry. Once you can get a good entry, you are sure of the profits. If you go with half of your ATR, or even lesser than half of your ATR as your TP, and you have a better risk management, a better list lot size, you are sure of the profits you want to make. Thank you. I'll see you in the next video. And it will be right here on this channel. It will be later or sooner than you think. I should say sooner. Yes, it will be sooner than you think. The video will come pretty soon. That will be the episode 15. Leading Forex. Make time with us always. Subscribe to this channel where we will give you honest tutorial. We'll give you the best tutorial you can think of. The tutorial that can help you to become a good trader in the Forex market. I want to believe that this channel will become one of the best in the world because I am giving you what people are paying for and they are not even getting. Yes, people are paying for materials which do not even do what I am showing you, or do not even worth, or it's not even worth what I'm giving you. So take what I'm giving to you seriously because it's for free. But the best you can do is to let this community grow by sharing the video, subscribing, at least leaving a comment or liking our video. That is the best way to make the channel grow. Do that and God will bless you. I'll meet you in the episode 15 video. Thank you.